And welcome to the webinar. My name is Michelle Deharsh. I am a Disability Sales Manager here at Financial Brokerage. This morning we have Anders with MetLife discussing the size of the white-collar market occupations you probably didn't consider that were white-collar and how MetLife is priced to accommodate this market. With that, Anders, I'm going to go ahead and hand it on over to you.
Thank you very much. It is a pleasure to be here, and also, I do have my internal counterpart, Justin Smith, with me today. Justin is, as I said, my internal, and he's really here for any questions we have when it comes to pre-sale items, so occupation classes, quotes, marketing materials, things like that. Justin, why don't you say hello?
Hello, everybody. Good to be here.
Hi, Justin.
So with that being said, we really want to talk about where MetLife fits, and to get there, we really have to understand DI and understand MetLife as well. So I want to ask you, why aren't you selling disability insurance? There are three groups of you out there. Of you that are already selling disability insurance, and you might know what I'm saying here. There's a huge opportunity to be had with this product. Some of you know something about this product and came here looking to learn more, and that's great too. We're going to dig deep and get you prepared to sell DI and understand income protection. And then there are some of you who sold disability insurance in the past, maybe had a tough time and dropped it from your sales presentation. We're going to talk about that because I know why you walked away. But I have good news for you. Times have changed, and you owe it to your clients to revisit discussing disability insurance with them. No matter which group you represent, my goal here is to give each of you, leave here ready to add a finessed pitch of disability insurance to your regular insurance sales presentation. So with that being said, why don't we get started? Today we'll discuss some history surrounding disability insurance to help dispel some of the prevalent myths surrounding it, offer some client insights and compelling statistics that will show just how great a need for this product exists, clearly define MetLife's disability insurance product and its key benefits, and finally, I want to provide you with some effective sales ideas for you to apply as soon as you walk out of this meeting today. Let's start with a little history. 30 years ago, many companies were competing within the disability insurance market, fighting tooth and nail for the business. This aggressive pursuit led to very liberal underwriting, benefits, and issuing participation limits, which then led to a loss in profitability when they experienced a larger than expected level of negative claims. Many companies abandoned the business altogether, while those remaining tightened their underwriting practices, restructured their pricing, and in general made it far more difficult to gain coverage and ultimately to make a sale. More exotic products entered the marketplace, and many of you walked away. Second-generation brokers had little to no exposure to the product, and it fell out of favor. The good news is those days are behind us. Today, underwriting no longer presents the barrier it once did, and is far more wide-reaching than ever before. The low ceiling of coverage has been lifted, and MetLife has positioned its product well, recognizing the great need for it. There's a massive opportunity in front of us, and we need to take advantage of that. We owe it to our clients to add it back into the life insurance presentation as part of a full protection plan, and now. And here's why. About 100 million workers are without private disability insurance. 69% of workers in the private sector have no private long-term disability insurance. Less than 5% of disability accidents and illnesses are work-related. and workers' compensation doesn't cover those. This is income insurance. And 33% of all Americans believe that they would feel the loss of the primary wage earner within 30 days. I don't have the statistics moving out, say in 60 days, but you know the percent is going to get higher and higher. The reality is a disabling accident can last long past 30 days. Virtually anyone who depends on an earned income should be a prospect for disability insurance. Disability insurance can help meet your clients' financial obligations and maintain their current lifestyle. Life insurance money can be used for final expenses, help to replace lost income, cover debts, pay their mortgage, fund a child's education, and more. Disability is defined differently between each company and products. It is important for your clients to understand that the definition of disability can be different from company to company. Here's how MetLife defines disability. What occupation would the insured be unable to perform to be considered totally disabled? Now, if we look at this first box, we have our standard definition. The insured's regular occupation at the time they become disabled. And then we move down, we have transitional year occupation. The insured's regular occupation at the time they become disabled. Same with your occupation, but we're going to take it a step further. And when we think of the white-collar market space, really we think medical and dental professionals. And this is where specialty your occupation can come in, and that is the insured's regular occupation at the time they become disabled. If performing medical or dental specialty, the duties of that specialty you were performing immediately prior to the start of your disability. So we really have an option here that really speaks to medical and dental professionals. And then if we look at the right side, while totally disabled, how long will the disability benefit be paid? We go with the standard definition up to the insured's maximum benefit period, which could be 2 years, 5 years, 10 years, to age 65, 67, or even 70 years of age. For transitional year occupation, that is until the transitional disability maximum benefit period ends, or the base maximum benefit period ends, whichever occurs first. So we're really limited to 100% of the pre-disability earnings of the client. Anything after that, the benefit's going to be reduced. For your occupation and specialty your occupation, that is from the regular occupation up to your chosen maximum benefit period. And with these two riders, when we define total disability, those two are really a double dip. There is no pre-disability earnings involved, and you can actually exceed those pre-disability earnings based on what you're earning in your new occupation plus the benefits you receive. There's 3 different types of premium and renewability options offered on disability insurance contracts. The first one, called guaranteed renewable, which the insurer must renew the policy as long as the premiums are paid. The premium is not fully guaranteed and could be increased in the future, but only on an entire class basis, subject to the state insurance department's approval. MetLife's Omni Essential product is a guaranteed renewable contract. Typically, premiums on a DI policy that is guaranteed renewable, those premiums are level, meaning that they don't change until the end of the policy coverage, which is usually age 65 or 67. A non-cancelable policy cannot be canceled or changed, and premium rates cannot be increased as long as the premiums are paid on time. This is a fundamental difference between guaranteed renewable and non-cancelable contracts. Please keep in mind that the policy can still lapse due to non-payment of premiums, but the company cannot cancel the policy or charge more than what was scheduled at the time the policy was issued, regardless of the company's experience with that business. And now, typically premiums on a DI policy that has non-cancelable renewability, premiums are level, meaning that they don't change until the end of the policy coverage, usually age 65 or 67. Now, when we're thinking of the white collar space, those folks who we're really going to talk about later on in the presentation, we're really going to be dealing with the non-cancelable guaranteed renewable coverage. So we really want to focus on those definitions so we really understand what we're offering to these clients. And now, one other option that we have, and we do have annually renewable and term premiums. Those are premiums that can be included on a guaranteed renewable or a non-cancelable policy. Typically, disability policies have a level premium until the end of the policy coverage. When annually renewable or term premiums are used, instead of that level premium until the end of the policy, premiums change after a set period of time. Just like term life insurance, coverage paid for with annually renewable or term premiums still provide coverage until age 65 or 67, but instead of a level premium until the end of the coverage, premiums will change after a period of time, either 1, 5, 10, 15, or 20 years. MetLife offers a term premium conversion rider which can be attached to a guaranteed renewable product, the Omni Essential product that we mentioned earlier. Term premium conversion rider is available as a 1-year renewable form where the premium increases each year. And we do have a 5, 10, 15, or 20-year term period version of this rider, which is also available. The 5, 10, 15, 20-year term has level premium for a set number of years in that term, and then the premiums increase on an annually renewable basis after that. If you have questions about the term premium conversion rider, feel free to reach out to Financial Brokerage, and we will make sure to get you the necessary materials to understand how that rider really works. And I just want to touch on, again, when we're talking about white-collar professionals, we're really looking at that non-cancelable guaranteed renewable coverage. However, we do have the ability to offer cheaper coverage through our term premium conversion rider if, in fact, cost is a factor to your client. The most common objection that I hear from advisors and insurance professionals is my client already has group disability coverage. But here's my response to that. That's great. I wish everyone out there had that benefit. But let's talk about the holes that exist in those plans. And please note, this is not selling against the group plan. This is selling in addition to it, layering on top of it. Those opportunities do exist. So I charge you with reviewing the plan and point out, for example, their bonus or incentive comp may not be covered. Check on the income tax ramifications involving the group plan. Now, most white-collar professionals do have some form of long-term disability insurance or group coverage, if you will. And what we're talking about is layering an individual disability policy on top of that. Because as I said before, most group plans will only cover base salary. They won't cover incentive comp, bonuses, income like that. What's important when choosing a policy? We want to discuss benefit amounts. How much benefit is the client going to receive on a monthly basis? What is the maximum benefit period? This is the longest period of time benefits will be paid for any one period of disability, and it's usually defined one of two ways: up to a certain age, to age 65, 67, or 70, or for a certain period of time, 2 years, 5 years, or 10 years. And then we also need to consider the elimination period, which is the period of time that must elapse after the onset of a disability before benefits become payable. And now when we think of the white-collar space, benefit amounts are typically going to be higher, benefit periods are typically going to be longer, and the elimination period is typically going to be shorter. I would say on average we're looking at 90 days for elimination periods. So once the client files a claim, day 91, they will start receiving their monthly benefit. Now, one of the other things we need to consider is the health of the client. That's used to determine the eligibility for disability insurance. Medical conditions and health history are used to evaluate the likelihood of becoming disabled in the future. An applicant for disability insurance will be asked to supply detailed information, including height and weight, medications, and medical history. In addition, doctor records may be requested as a paramed exam, and labs may be required, as well as a personal history interview may also be required to verify information on the application. The amount of money your client earns will determine the amount of monthly benefit he or she can obtain. During the application process, your client will need to provide proof of income, like a W-2, 1040, or even a recent pay stub. They will also have to report any unearned income, liquid assets, and bonus or commission income. If your client owns his or her own business, check with underwriting for those specific requirements. Now, more importantly, your client's occupation will play a very important role in determining what kind of disability income insurance he or she can buy and how much the policy will cost. This is a much more significant factor when underwriting disability insurance than it is for life insurance. Occupational classes are assigned based on the requirements of an applicant's job and the risk which that job poses to the applicant's health, as well as industry claims experience. In addition, your underwriter will want to know information beyond the client's job title, such as job duties and tenure in that position. The more information you gather about the client's medical history, the better. Being able to identify morbidity risk in the field can help you speak about the possible underwriting outcomes. Preparing applicants for the underwriting process can increase the likelihood they accept a policy that might exclude certain conditions or cost more than originally thought. And, this slide really reminds us of what takes place during the underwriting process, but how does it relate to the white-collar space? Well, let's think of a medical or dental professional. They deal with health history on a daily basis. They understand the need for income protection based on the items we just discussed. Life insurance underwriters consider health information that statistically could impact the likelihood of dying, also known as mortality. Conversely, DI underwriters consider morbidity factors. These are health conditions that have a statistical impact on the likelihood of becoming disabled. While some conditions would impact both mortality and morbidity, there are certain conditions that are a stronger indicator of morbidity risk factors. Some of those underwriting concerns are back disorders, diabetes, mental, nervous, alcohol, and drug disorders, blood pressure, cholesterol, knee, shoulder disorders, to name a few. Insurance companies leverage their own unique guidelines for determining how much monthly benefit an applicant can receive based on his or her income. Typically, the company will offer an applicant income replacement anywhere between 50 and 70% of the applicant's pre-tax earnings. Now, when we think of unearned income, which could be investment earnings, to reduce the possibility of overinsurance, insurance companies may reduce the maximum monthly benefit. Occasionally, applicants with extensive assets or unearned income may not be eligible for DI coverage or may be offered policies with reduced benefits, longer elimination periods, and or shorter benefit periods. What if they have other disability coverage in force? We talked about group long-term disability and even existing DI coverage count towards the maximum benefit one can obtain. Typically, the amount of group LTD coverage in force or available is taken into consideration in determining the amount of individual DI coverage an insurer will issue. The amount available varies according to the individual DI benefits being applied for and the taxability of the LTD benefit. So if we want to correlate this slide to white-collar professionals, we think of unearned income, net worth, things like that. For MetLife, when it comes to net worth, we no longer have a requirement for net worth. If you have a client that's worth $5 million, $10 million, $20 million plus dollars, we can offer them DI coverage. An occupant's occupation is very important in determining insurability because of the risk that each occupation imposes on the proposed insured. Pricing and available benefits are often determined by the applicant's occupation. This is MetLife's occupational class grid, which shows the spectrum of classes that are insurable. Looking from left to right, the grid captures occupation that pose the most risk and flows to the less riskier occupations. Starting with Class B, which is typically the more labor-intensive occupations, including mechanics, plumbers, and welders. But as we move across, we include machinists and electricians and dental assistants and office clerks. Representing the least risky occupations are attorneys, CPAs, and pharmacists, and they're in the 6S occupation class. Now, for a complete listing of insurable occupations, please refer to the occupation class guide, which you can obtain from Financial Brokerage. And when we think of the white-collar space, if we look at a 6S, we're talking about a business executive, an attorney, a pharmacist. A 5A, school administrator, small animal vets. 5Ds, orthodontists, pediatric dentists, oral surgeons. A 4M, a dentist, an OBGYN, or an ER physician. Really, the occupations that we want to focus on for the white-collar space is 4M and above. If we look at the top, we have financial advisors and fund managers who are a 4A, a 5I, a nurse practitioner, a physician's assistant, a 5M, a dermatologist or an oncologist, a 6M, a neurologist, oncologist, pediatrician. Those are the occupations that you really want to target when it comes to white-collar professionals. This is where you will sell the majority of MetLife individual disability income protection. After all underwriting requirements are met and evaluations are complete, your underwriter will make a decision about the application. There's two basic outcomes that would be standard, which means the policy is issued as applied for or a decline. However, it could also be issued with any or a combination of the following adjustments to the policy. Different occupation class that can increase the premium or change product or optional benefits. Could offer reduced benefits, shorter benefit period, reduced monthly benefit amount, or limited optional riders. We could add an exclusion rider for a particular risk, or we could add additional premium to offset that risk. MetLife's DI product is unique to the industry, and it offers flexibility to your clients with a variety of optional riders. Most clients favor the first two, automatic increased benefit or guaranteed insurability. That will allow your clients to increase their coverage as their income increases. The life event refund of premium and term premium conversion riders are not widely used, but they still offer a variance to your client's choices. If your client's concern is protection, should they become disabled? Catastrophic disability is available, pays an additional monthly benefit should the client become catastrophically disabled, which could be anything from quadriplegia, paraplegia, hemiparesis, or some cognitive impairment like dementia or early onset Alzheimer's. We have a COBRA reimbursement rider. And if your client were to become disabled and lose their job and have to go on COBRA, we provide a reimbursement for your client for having to do that. We also have a cost of living adjustment, which will allow your clients to keep their benefits on pace with inflation. And we have three different types. We have a 3% simple, 3% compound, or a 0 to 10%, which is based on the CPI, Consumer Price Index. If your client's concern is protection until they can return to work, we have a few different types of residual disability, which receive at least some benefits while disabled and working at less than full capacity. So really with the residual disability riders, you're going to have a percentage offset. If your client can work, but due to a loss of time or duties, they lose a percentage of income, we can offset that percentage loss as long as that is greater than 15% or more. To receive benefits up to their full benefit after starting a new job with a new salary because they are unable to return to their old career, let's think of an attorney, for example. We have the Your Occupation or Transitional Your Occupation rider, which we spoke about the contractual definitions earlier in the presentation. When we think of white-collar professionals, the residual disability riders and the Your Occupation riders really come into play. Those specialists, those attorneys, architects, engineers, these riders right here really protect them because they are specialists in their field, and that's where these riders can really make a difference between obtaining the sale and not obtaining the sale. So let's go back to those myths I briefly discussed during our DI history earlier in the presentation. Underwriting is complicated, but it's really not. Simplified underwriting is available to make underwriting a lot easier. Simplified underwriting is a full application. We do a prescription inquiry in the background, and the client does a phone interview. They don't have to submit financials. They don't have to do a paramed. It's very simple. It's the easiest way in the U.S. marketplace to obtain income protection. Every case we receive is assigned to a case manager to ensure applications do not get missed. If you have questions, we have a resource line that's available to help you understand the questions that you have. The service relationship team we have is also available to help resolve issues and improve the underwriting process for new business cases. Underwriting isn't flexible. MetLife has some of the highest DI coverage limits in the industry. Also, occupation classes are continually being reviewed with coverage and the occupations in each class adjusted when necessary. Underwriting is too long. With our simplified underwriting, that can shorten the process. Decisions can be available in up to as little as 48 hours. Again, each case has an assigned case manager who is responsible for following an application through the entire process. This helps ensure the application approvals stay on track. My claims won't get paid. We pay approximately $13 million a month in disability claims. Since 1868, MetLife has been one of the largest and most respected financial institutions in the United States. MetLife is a leading global provider of insurance, annuities, and employee benefits programs, which serves over 90 million customers in over 60 countries. And MetLife's financial strength ratings are among the highest in the industry. Underwriting doesn't support an easy life DI cross-sell. And this is one of my favorite to debunk because it leads us to where we all want to do sales ideas. Clients who purchased a MetLife life insurance policy in the last 12 months may be eligible for a 5% premium reduction on a future disability insurance policy. So there you go. My first sales idea for you. Go back and review those clients you sold a MetLife insurance policy to in the last 12 months and approach them with this discount opportunity. A sales idea here for your high-income executive client. We have Andrew, who's a 38-year-old corporate attorney, making $150,000 with a $30,000 bonus, which breaks down to about $15,000 per month. He does have group coverage. However, his group coverage does not cover bonus and has a monthly cap of $5,000 per month. His goal is to protect more income for his young family. So the benefits are that Andrew will have a full-featured policy that, combined with his LTD coverage, protects a greater portion of his income. If his income increases, he can increase his supplemental DI benefit without medical underwriting. If he becomes disabled and returns to work, but not full-time, or he takes another job, he may be eligible through additional benefits. Stackable discounts. And here's a couple ideas for your medical dental professional clients. Catherine, who's a 42-year-old OBGYN, one of 4 partners in a new practice. Very small. She's earning an income of $150,000. Because of her new practice, she no longer has group coverage since starting her firm, and she needs income protection since her household relies on her income. Catherine obtained income protection that she needed and saved $2,370 on her premium with unisex rates and stacking discounts. Building a plan for a medical or dental professional. We have Joseph here, who's a 37-year-old pediatrician. Recently took over a small practice, and he's earning $216,000 in income. Without income protection, he lapsed his DI policy he had when he was a medical resident. Married with 2 children, and is concerned about losing his income since he is the primary earner in his family. Joseph's DI policy will pay a benefit regardless if he's working in another occupation, as long as he cannot perform the duties of his medical specialty that he was performing immediately prior to his disability. So why MetLife? just reiterating what I mentioned while discussing dispelling the myth. But it's worth discussing again. MetLife is committed to partnering with you in this business venture. We've developed a competitive product and a great support system to help you gain and sustain your business. Now is the time to build the disability income insurance product back into your overall sales presentation. And MetLife is here ready to help. Now, are there any questions?
I don't think so, Anders. Thank you to you, and thank you to Justin for this presentation. We covered a lot today, from types to objections, underwriting, some great sales ideas. Again, if anyone thinks of any questions after you've left the webinar, you can contact Financial Brokerage. Ask for myself, Michelle Desharsh, or Tim Dreer in the Long-Term Care and Disability Division. Our number is 1-800-397-9999. Again, thank you, Anders. Today was a wonderful webinar. Thank you so much.
Thank you so much for allowing me this time with you. Please feel free to reach out to Financial Brokerage or myself if you have any additional questions that come to mind later. I look forward to partnering with you in increasing your disability insurance sales.
Thank you.